Now, global stocks slumped yesterday to mark the largest weekly drop since the 2008 global financial crisis. This is, of course, over fears that the coronavirus could wreak havoc on the world. Economists fear the spread of the coronavirus is tipping the global economy into a recession. With the virus now detected in at least 56 countries, companies are readjusting their annual profit expectations, and economists are lowering their forecasts for global growth. Policymakers also have signalled that they are ready, if needed, to act to stabilise the economy. Joining us now to speak further on this is the Managing Director of COWRY Asset Management, CHUKWU. Good morning. Thank you very much for joining us on the morning show.
Good morning, and thank you for having me.
Now, we've been speaking about the coronavirus all day, and we will probably be speaking about it all month, because this is something that is tanking the global economy. But let's focus on what it's doing to Nigeria's GDP. It's so scary that the IMF have actually come out with their own statement. Talk to us about the effects of coronavirus on Nigeria's global GDP, rather.
Okay, the challenge is that Nigerian economy is largely dependent on the price of crude. What has happened in the crude market is that the coronavirus infection has spared about 425,000 metric tons of demand for crude. And what that means is that the price of crude has actually come down drastically in the past couple of weeks. We've seen Brent crude, which is Nigeria's class of crude, trading about $50 per barrel, down from close to $60 per barrel. Right. We are seeing our stock of crude unable to find markets. So what we are going to see is that you're going to see a drastic drop in our foreign exchange earnings as a result of slowdown in manufacturing activities in China. Remember that currently China accounts for about 16% of the global economy, and China is the largest importer of crude in the world. So with the slowdown in China, with factories shutting down, with cities on lockdown, what we are seeing is that demand for crude has actually come down drastically. And unfortunately, it happened at the time when Nigeria does not have so much reserve, or what we may call headroom, to manage a slowdown in economic activities. So we're dealing with a situation where crude price has come down, is affecting supply and demand, and as a result of that, it's affecting our reserve. The next thing that will happen is that if this persists, you might see a situation where the central bank will not be able to contain or maintain the current exchange rate. So you could see a shift in exchange rate or a depreciation or devaluation of Naira. If that happens, it will also transmit into the inflation rate. You could actually see a further increase in inflation beyond the 12.13% we had in January. So the implications of the coronavirus as it relates to Nigeria's economy can be very pervasive. And the transmission channel is mostly likely going to be from one, crude prices and crude demand, and two, supply of input materials from China. Today, China basically produces the global inputs for manufacturing activities. They are producing electronic, they are producing spare parts. So you find countries like even South Korea, where Hyundai had to shut down their operation because they couldn't get enough supply of parts from China. A lot of Nigerian businesses, Nigeria is that China is actually the largest import market for Nigeria. So we import not just raw materials, we also import semi-finished goods from China. So should this persist and China is unable to continue to produce, then you are going to see even factories in Nigeria shutting down. That is at the global level. Of course, at the local level, there are also implications like situation where Lafarge has been shut down because the index case actually had interaction in Lafarge. So that factory has been shut down. You could also have, depending on how the implication, the index case had, the number of interaction they had and how many of them come down with coronavirus, you could actually have multiplicity of cases. You know, I understand he slept in a hotel in Ikeja. You could actually have a hotel that was shut down. And then when you begin to trace the contact of people who had that interaction with that hotel, you could have a chain of events. So as it stands today, nobody can say exactly the magnitude that this coronavirus will have on the economy, but clearly it's having negative impact. We're already seeing a situation where the Chinese economy is expected to, growth is supposed to reduce from about 6% to about 4.5% this year as a result of this coronavirus. So we are seeing global economy. We are seeing the airlines are projecting they will lose in the first quarter of this year between $4 and $5 billion. So in all ramifications, we are dealing with an unknown quantity because we don't know how far the world, how long it take the world to contain this. Because unfortunately, the speed of transmission is too fast. I was looking at some of the figures. Iran had the first index case on 18th of February.
Yes.
By 28th of February, they had 245 cases.
Including the Minister of Health.
Including Prime Minister as well as they had 26 deaths. And that actually got me worried because the data we've been dealing with says that the fatality rate of this infection is only 2%, which means if you have, like they say, there are 80,000 people, you just have less than 400 deaths. But in a situation where you have 26 deaths in Iran, out of 246,
it's more than 2%.
Then they are talking about more than 10%. So I got worried. I said, look, could it be because advanced economies had better medical capabilities to manage this infection that we're having 2% case? Can the third world economies have the same capacity to manage this infection as to keep to that 2% fatality rate?
Well, thankfully, the WHO has been praising Nigeria's response capacity and capability so far, and we hope that, you know, things remain that way. Now, let's even go back to some kind of, you know, positivity so that this is not all gloomy. I mean, since the 2016 recession, 2019 looked very good for Nigeria. The economy actually grew by 2.27%. But then there's this cloud, you know, hanging over, you know, Nigeria's economy with the COVID-19 outbreak. Are you saying that the policies of government, you know, that have been on for like a year or so now, like the ban on 41 items, the border closure, you know, and a few other, you know, policies are not strong enough for Nigeria's economy to withstand these global shocks?
Okay, let me put it this way. If you look at the structure of the Nigerian economy, oil only accounts, in the fourth quarter of this year, only accounted for about 7.32% of the GDP. But in terms of the implications of oil on the economy, oil, earnings from oil, which is our foreign exchange earning, oil accounts for more than 70% of foreign exchange earnings. And the entire economy is, the liquidity of the economy we get comes from oil. What I mean is that it is from oil earnings that we earn our foreign exchange to import raw material for the manufacturing sector, to service our debt, foreign currency debt, to do a lot of things. So the challenge is that should anything happen to oil price, because of the fragility of our economy, in the sense that we don't have multiple foreign exchange earning sources. If anything happens to the oil sector, the transmission is very instantaneous, in the sense that you're not able to earn foreign exchange. If you're not earning foreign exchange, foreign portfolio investors become averse in coming to your country. So the second source of inflows will also dry up. And then not only that, you will not be able to have enough foreign exchange to be able to import raw materials, equipment, and what have you. The challenge we have is the structure, the fragility of the economy is such that in as much as in terms of contributions to the GDP, the economy is broad-based. But because only one product accounts for close to 80% of your foreign exchange earnings, anything happens to that product affects the entire economy. So our economy is not yet robust enough to withstand an oil shock.
In spite of the gains being made with diversification, especially in agriculture, for example?
Okay, let me even talk on this diversification we're talking of. Like I said, in terms of broad base, in terms of contribution to the GDP, economy is well diversified. If you look at the fourth quarter GDP, for instance, agriculture accounted for 26% of the GDP. Trade accounted for about 16% of the GDP. Telecommunication accounted for about 13% of the GDP. Manufacturing, about 8% of the GDP. Construction, about 4%, 3.4% of the GDP. So if you look at these other sectors, you find out that aside from oil, which only accounts for 7.32% of the GDP, the entire non-oil sector accounted for more than 92% of the GDP. But the problem is, in terms of foreign exchange earnings, Oil accounts for close to 80%. So in terms of contribution to the GDP, but the problem you have is that should you not be able to earn enough foreign exchange from oil, the manufacturing sector, which accounts about 8% of the GDP, will be in difficulties. The telecommunications sector, they will not be able to pay for broadband internet services. They will not be able to pay for equipment. They will not be able to pay for a lot of things. It will also be in difficulties. So, and that's where, in as much as in terms of contribution to GDP, the economy is broad-based. It's largely diversified. In terms of foreign exchange earnings, it is highly exposed to only one product,
which is oil.
Absolutely. Well, last year, the government slapped the big oil majors with a lawsuit for $62 billion in back taxes. Will this assist our economy in any way, shape, or form? And will we actually even see this money, the recuperation of this money?
Well, we need to watch and see how the court case will go. It will be too speculative at this point to begin to imagine that it will be like counting your eggs before they are hatched, your chickens before they are hatched. So I wouldn't know if the government has strong enough case to win the lawsuit. So I wouldn't even factor that as part of our prospective earnings as it stands today. Because you have to look at the back duties. You remember that the government also slammed charges on MTN and they had to withdraw it.
Yes.
So you don't know how that will play out. So I think it will be too speculative at this point for us to begin to count our chicks before they are hatched.
What isn't speculative at this point is the fact that Nigeria, as you said, depends heavily on its foreign exchange earnings, which is naturally oil. Because of what we're seeing with this coronavirus outbreak, naturally it's having ramifications on the global economy, and definitely we're seeing that case in Nigeria. What do you think can be done to offset those problems? Can anything be done since we're so heavily tied to our main foreign exchange earner?
You know, the key to this is what we should do is to start the journey of diversifying our foreign earning sources. It's not going to happen overnight.
Feels like it hasn't been happening at all.
No, I wouldn't say it's not been happening. We've seen an increase in export of other commodities, but the size, the value has not been so material. But the key thing is, if you do the right thing, take for instance cement. We're not in a position to export cement. But we need to build the facilities to export cement other than by road. Today, we don't have export terminals that can handle bulk cement export from the country. So you find out that the Dangotes of this world and the Lafarge of this world are exporting cement to the land borders. With the closure of the land border, they are not able to export their products. So we must also build facilities that will support some of these.
All right, we'll put you on hold very quickly, if you don't mind. Managing Director of COWRY Asset Management, Johnson CHUKWU, speaking with us on the impact of the coronavirus on the Nigerian economy. We'll talk some more when we return from this break.
Well, welcome back to the morning show here on Arise News. Still with us, we have the Managing Director of COWRY Asset Management, Mr. Johnson CHUKWU. Thank you for talking to us. Thank you for being here. You know, during the break, we were saying that in terms of the economics of it all, it's all very depressing, despite the fact that we know that speaking to the Commissioner of Health for Lagos, that there are instances where we can be positive. If we look at the economy, despite the ramifications of something negative, are there any positive aspects that we can look forward to in terms of the coronavirus, its implications on Nigeria's economy, and the outlook for this year?
That's a very interesting question. We have a pandemic.
Right.
And you're looking for the positives.
Well, sir.
Well, the positives could be, like you guys asked Professor Bayemi a question, that is it possible that Africans might have natural immunity for this? Maybe along the line we'll find out that Africans cannot easily be infected. Because there are actually some diseases that are only limited some races. For instance, we suffer sickle cell. The Europeans don't suffer sickle cell. Caucasians don't suffer sickle cell. So let's hope that this coronavirus will largely be limited to. Because I read of a Cameroonian in China who was down with infection and recovered almost miraculously. So it's possible we have some natural immunity to it. But that could be the only positive. But in terms of economic implications, it's very depressing, like you rightly said. I've looked at the figures globally. The U.S. economy will be affected. U.S. producers like Apple, like Microsoft, already complained. Microsoft has already come out to say, look, the production of their laptops and iPhones, Microsoft, their laptops will be affected because the supply of the two equipment or parts coming from China, it cannot be guaranteed. Apple has actually given profit warnings. Apple has said the shutdown of shops in China is affecting them. And virtually, Honda, I mentioned earlier, had to shut down their factory at some point. And if this persists, you could actually see a lot of shutdown of vehicle manufacturing factories in Europe, in North America, that is US, Canada, and the rest. Because China has turned out to be the largest parts producer.
Yes, a motor manufacturer. Yes.
Globally. So the pharmaceutical industry is also suffering as it stands today. So we could get to a situation where people will not be able to find some goods in the shops because those goods are coming from China. And I also believe that for Nigeria, that has China as the largest import market, it wouldn't be too long before we find out that, look, you really can have some of the things you take for granted, you can walk into a shop and buy.
As a matter of fact, the NAFDAC boss, Adeyeye, did raise the alarm only a couple of weeks ago that, agents and reagents to manufacture drugs and, may be seriously affected if Nigeria does not do something very quickly because most of it comes from China anyway. But let's, build a bigger picture. Only a couple of weeks ago, we heard that there is a strong possibility that Nigeria may go into a recession again and then throw, COVID-19 into the mix. It's almost, even further complicated. Asian countries alone in a year actually exported $25.2 billion worth of palm oil, a product that Nigeria has very good comparative advantage in, but unfortunately, we are actually importing palm oil, spending about 90 billion naira every year to import palm oil. Looking at it from that angle, how really serious is Nigeria about diversifying its economy and taking advantage of those resources that it has, comparative advantage in?
And could this potentially even force us to further diversify the economy because now we won't be able to source it from China?
Exactly.
That was the positive I was talking about.
That's the one positive, perhaps.
Is it just lip service? What are the implications of this really for us?
Okay, what I would say is that economic development is never an accident. Obviously, we'll be managing the economy of this country as if providence will just happen on us and we become a prosperous nation. And that's why when Hillary Clinton came here a couple of years back, she said, look, we should be tired of we're a country with a strong prospect. We should realize these prospects. The fact is that if you don't plan for it, it's not going to happen. We've had series of governments since independence that have not shown very strong grit for planning, that are not consistent with policies. And it happens that any government that comes into power will come up with new policies. We don't really have a clear economic direction. Countries that want to develop will define how they want to position their economy. You really want to be a manufacturing economy, you want to be a service-oriented economy, or you want to, depend on how you want to position your economy. China decided they want to position the economy as a manufacturing hub. And that decision was taken in 1978. By 1980, Chinese economy was only up just about $305 billion. Today, China's economy is $14.14 trillion. China has a per capita income of more than $10,000, despite the fact that they have a population of 1.309 billion. It wasn't an accident. Prior to 1979, China said they were a communist country. They thought economies could be managed as a result of by driving people to pursue nationalistic interests. And then they had a long walk, or whatever they call it, long march. And ultimately, that led to pervasive hunger in China. People were giving food handouts to Chinese. But they changed that when Deng Xiaoping said that a little capitalism is good for the system. And they introduced centers to try capitalism, Guangzhou and all the rest. And today, China economy has grown. For more than 30 years, the Chinese economy has grown an average of more than 10%. But let's bring it back home. Between 1999 and 2007,
I'm going to just interject because we have about a minute left. And I want to just ask you, for the sake of our viewers, they are calling this a black swan event because it's unpredictable, it was unexpected. COVID-19 is affecting the global economy. But in terms of stocks, they say gold is stable right now. Do you advise our viewers to buy or to wait it out?
Well, I think it's too early for anybody to panic on what to invest in. We saw a market drop of 2.21% on Friday. We've seen that S&P 500 has dropped this week by 11.5%. Those corrections may reverse in the subsequent week. I checked, and there's clear indication that the rate of infection in China is slowing down very fast. So China is beginning to contain it. And I hope whatever they are doing to contain it, they will pass it on to other parts of the world. You might realize we may actually end up with a situation where the implications of this may not be as pervasive as people are worried. It's only if you're unable to contain it that people should get to that panicky stage. So
are we buying stocks or are we waiting? Or are we selling off our stocks?
I think for now, you'll be on the sidelines to watch how the market performs next week. And then you could actually have the opportunity of going in and buying cheap because with the correction we saw, some of those stocks are trading below their intrinsic value.
Great advice.
Okay.
And that's a nice positive note. That's the positive note.
I mean, come on.
A nice positive note
My
to leave that on.
directions, you know.
Now that's all on the economic effect of the coronavirus.